Hi, everybody. Welcome to another episode of Not Another Fucking Podcast. I'm here with my guest, Andrew Easton. And Andrew, yeah, if you'd like to tell people who you are, what you're working on, and then we'll kind of take it from there.
Sure. Real quick, I'm Andrew Scott Easton. I'm a Los Angeles native, born and raised. Right now, I manufacture Bitcoin, and we can get into what that means. But I got into that space after being a corporate executive, strategy consultant. I used to work at Northrop Grumman and Ernst Young, and was an MBA professor at USC. But I've been an entrepreneur for the past 10 years. Got into blockchain around 2017. And then eventually landed in this space of Bitcoin mining. So we can get more into that.
Which seems to be like one of the more important spaces to be in right now. Everything seems to be just be flowing into BTC. And that seems to happen every cycle. Like, we have this run with BTC and then alts supposedly follow afterwards. And then when it all kind of retracts into like a bear market, it all kind of repeats itself. It all crashes back down. BTC, retraces, but was it usually 80% ish, give or take, and then essentially the alts go like minus 90, minus 99%, and then at least all the like really low cap ones, and then then you have BTC rising up again,
Mm-hmm.
taking all the news. Although we haven't really seen much action from alts this time around, I think, and I think a lot of attention is just going straight into Bitcoin,
Mm-hmm.
and that's interesting. And do you think that is kind of what's going to continue to happen? Like everything is just going to completely flow into Bitcoin, or do you think there will be this quote unquote alt season that happens? And yeah, what are your thoughts on that?
Yeah, it's interesting. I definitely am hearing from some of my advisors that this cycle is going to be different. And we all say that. We say that every cycle. So I think it's interesting to try and analyze this. We're definitely seeing that this is like Bitcoin's moment. There's incredible adoption we're starting to see with the network, and it's really finding its kind of like fit in the market, which is coming out in sort of like these strategic Bitcoin reserves and corporations putting themselves on the Bitcoin standard, which has been a really interesting shift in understanding how Bitcoin works, why it works, how it compares Bitcoin to, fiat. And as corporations are making the shift, clearly they have to acquire Bitcoin. So they have to put it on their balance sheets in order to be a part of this. And Bitcoin's just at such a level of adoption and yet has so much more to go, right? If you look at those comparisons of if it's an asset comparable to gold or silver, it's got a 10, 20x to go just to reach their market cap. So I think we're really early in Bitcoin adoption still, and yet we're also starting to see really significant moves in that adoption from the right levels you'd want to see, from the government level and then at the state level and now even at the corporate level. That's pretty incredible. So it's very different from what I would see alts being, because I always say this, to me, Bitcoin is, an asset. It's one of the greatest stores of value. And all the other cryptocurrencies or blockchains to me are softwares, and they're software companies that you're a part of. And you get to own a piece of the company. That's the whole point of Web3 to me. So the rest of the alts still feel retail to me, more retail, even though we're starting to see a lot more corporate adoption. We're even seeing some, strategic reserves being built of coins outside of Bitcoin. And I think that makes sense too, because they can be treated as almost a monetary instrument in the same way. But Bitcoin to me is really leading this charge. And I've had friends say they feel that in this cycle, any drawdown we see, typically that 80% drawdown we're expecting, usually came from retail, and they feel that that's just going to get gobbled up now. So they don't think there's going to be the same drawdown we've seen in the past. We think that we're just going to keep seeing these steady levels of accumulation over time. So it's going to be interesting to see when and if Bitcoin does that really hyper move it typically does, when it could go from 110 to 140K in like 3 days, because we've seen that before. Then the question is, where does it go from there, right? Does that liquidity get sucked back out? Or all of a sudden people are trying to sell at that level and it doesn't matter because the buying at that point is such a frenzy that it just keeps going. And then who knows where it goes from there.
What is interesting as well is that you're seeing kind of going back to that corporate level, like we've heard about institutions, we've heard about treasuries, we've heard about governments, all buying Bitcoin. But like now on the corporate level, everyone seems to be wanting to mirror strategy.
Hmm. Yeah.
like like literally you hear about all these listed companies that are like out there going, okay, well, we're just going to release lots more stock and just buy Bitcoin. And like, you've never done anything with blockchain or Bitcoin in the past before. Do you not
Hmm.
worry with something like that? Like I understand, and to be fair to Michael Saylor, like he's done it from such an early time. Like Bitcoin has to drop a very, very significant amount for him to be in trouble now,
Yes.
right?
Yeah.
Like his timing was I mean, it always could have been better, right? Like he could have done it earlier, but for where we are now, his timing, he strategy for they've got a big buffer. Anyway, they've got a very, very big buffer. A
Hmm.
lot of these other companies coming into it and copying the strategy works, obviously, if it just keeps going up, but they're coming in at quite a hot price, arguably,
Hmm.
right? Especially buying now. So what do you think that kind of means for the future of Bitcoin? And it's all great if it keeps going up, but we have kind of going back to the more crypto sphere, we have seen those 80% drawbacks before. And
Hmm.
would they be able to survive something like that? Or yeah, what's kind of your opinion on that? I think it's interesting. I mean, it's good for our portfolios. The more people buy, there's less supply, so obviously the price goes up. So
Hmm.
no complaints from that perspective.
Two things here. One is the proliferation of this strategy that I'm finding to be both fascinating and exciting. So I actually in Vegas got to attend one event with Trammell Venture Partners and a couple other big names like Franklin Templeton. And there was a company there I hadn't heard of yet that I got to meet, UTXO Management. And of course, you go to the Bitcoin conference and you just get to be like, what do you do? I'm a Bitcoin miner. Cool. What do you do? And everybody's excited about what you do. These guys are amazing. These are the guys that are a private equity firm that's coming in and bringing this strategy to companies. So they were the first ones to do it with, I think it was Metaplanet. Is that the Japanese company?
Yeah.
So these are the guys that did it. So they're the guys proliferating this. They're actually going in, they're like acquiring companies, switching them to the Bitcoin standard, and then basically like exiting or using that liquidity to move on to the next project. And they're incredibly successful. They're doing really well with this strategy, and they've got multiple companies under their portfolio. So one, I think we're going to continue to see it. Two, in terms of the strategy and the risk and the volatility, I think that's where we might see a couple companies get in trouble if they use this wrong, because it's not a short-term strategy. It's meant to be a long-term strategy against inflation.
Yeah.
And it's meant to be for companies that have significant assets on their balance sheet that they're holding in US dollars. And my understanding of Saylor's kind of initial philosophy is his company was having this same problem. He had a ton of value on his balance sheet, and he was running the numbers on, the cash flow of his business and how he was going to continue to grow to be $1 billion software company. And he just looked at the numbers and said, I can't beat inflation. He's like, I can't beat the fact that the money in my account is just going down in value so fast. So he's like, I need something better than that. And he's like, and you can't put typically equities on your balance sheet as a company. So a company can't own stocks of other companies in its balance sheet. And to him, he's saying Bitcoin is the first asset that you can actually put on your balance sheet very easily relative to stocks, relative to other equities. But it's the first one that's not depreciating, the first one that actually holds its value.
Yeah.
So that was his whole strategy. Now, I think in the short term, any company that's using this strategy and treating Bitcoin as like an opportunity or like a revenue product, I think that's when you get in trouble. But if you think of it as a true store of value, the numbers are in your favor because it's going to, it's been growing at an average rate of 50 to 60% per year. I know it's got incredible volatility. It's got 50 to 60% volatility, but that 50 to 60% just outperforms.
Yeah.
So if you have a
Or just
really
zoom
long
out.
term
And like,
lens, yeah.
it's happening. It's kind of consistently followed a pattern and doing that. I guess we might at some point we get to a point, if we keep going where we're going, we get to a point where Bitcoin becomes a lot more stable, and the kind of the price action can't move that much. I think the
Mhm.
problem. I think Bitcoin's Achilles heel is the fact that it is so liquid, right? It's
Mhm.
not as controlled by a lot of these institutions, whereas where you've got company stock, where you've got traditional commodities, a lot of that can be controlled to some extent, whereas
Mhm.
Bitcoin right now isn't as controlled as some of the, and people might disagree with me, and feel free to in the comments. Um, but I think it's kind of like it's a double-edged sword. It's very good in the fact that it is really liquid. Like, what kind of asset or store of value could you have that is so liquid that you could buy a house with, you could buy a car with? Yes, okay, it's not as easy and fast to transact as with cash, but let's not look at it that from that perspective. Look at it from the perspective of it's a store of value that's not losing value as you hold
Mhm.
it, right?
Mhm.
Over the course of, you zoom out, right? We're not saying specifically for a small amount of time. So in that respect, it's beautiful because, you are going to be at a point where, hey, yes, okay, I might not buy day-to-day items with Bitcoin because it's a bit too slow to do that. But if you want to buy big things like a house, like a car, even maybe, something like that, land, you can use that and
Mhm.
purchase it. And so
Mhm.
so imagine doing something like that with gold. You can't.
Mhm.
So that's the beauty of that. But then the flip to that, obviously, is that because it is so liquid, it can be very volatile, and it's not as controlled. Like, going back to gold as an example, a lot of that is sort of manipulated in terms of like what certain institutions hold, how much is actually traded, and same with stocks, right? Only a small portion is actually available to the public in most cases, right? Most of it's owned by the company and or the founders, things like that. And so the more liquid that is, the more volatile it can be. And I'm thinking, now that institutions, governments, and everyone's buying it, does that
Mhm.
change the narrative slightly as it goes up, essentially?
Yeah, yeah, it does. I think you've got a good point there, and especially in recession scenarios, which we felt like we've been on the edge on for a while now. In any recession, people are gonna liquidate their most liquid asset to start covering their bills. That would be Bitcoin, to your point. So I think that's what's really interesting, and I've made this point too, that we haven't seen Bitcoin go through a huge recession. Like, to
No.
me, the biggest recession was 2007, and that was right before Bitcoin. We've never seen something like that come around. We haven't seen massive, devaluation of assets across the board. Houses, 401ks, everything took a massive hit. Bitcoin should take the most massive hit out of all of that because it's the most liquid. So I agree with you that I think Bitcoin hasn't seen a significant event that really tests that theory. But I think you're spot on that it's going to have a lot of um, drawdown because it's so liquid. And then it just depends on how the rest of the market reacts. Like, if these big state organizations and corporations, what rules have they put around their Bitcoin reserves, right? Do they have drawdown strategies? Do they have hedges already in place? Or, are they caught, sitting ducks when it crashes? So yeah, I think there's still a lot more to explore. And I think it would be pretty dumb of us to just assume like we're good.
Yeah.
and,
No.
and so we have to assume that there's something bad that's going to happen. So to your point, let's assume something bad happens and that, there's a significant amount of these companies that aren't prepared for it, that have Bitcoin reserves that either they leveraged or they assumed were going to be, a part of a deal or part of their balance sheet size, that it wasn't just stored there to store the value, but it was used for something else. That's when I think you'll see a lot of trouble pop up. And we're seeing more and more of these like borrow against your Bitcoin type of things and some of them, it's like you're losing your keys, some you're not. That's where I think we start to get into trouble when we start to look at those like derivatives and leverage.
Yeah, yeah. I mean, in one sense, it's nice that that's happening because it gives people the ability to, not have to liquidate to spend some of their Bitcoin. But the flip to that is, yeah, I wouldn't trust a lot of these firms that are doing that, and they lever. I think it's like loan to value something like 50% for some of them. You know what I mean? So, and you think for most things, most assets, yeah, like gold's not going to drop 50%, right? But that could happen with Bitcoin. It's not
Hmm.
beyond the realms of possibility. And then
Yeah.
you just get liquidated, and then that causes a spiral, right? Because everything's
Yeah.
kind of going at the same time. But yeah. Anyway, we'll see. We'll see. Time will tell. I think let's switch it to slightly more positive things. Because overall, like things are very positive now, and but it's important to not be completely blind to the obvious risks and the things that could happen. But like we said, obviously, sailors mitigated a lot of that by getting in so early. But this kind of moving a little segue into what you're doing and setting up your mining side and things, and
Mhm.
I think your cost for mining is very, very competitive, shall we say, for your setups. We won't go into like specifics because you might want to not disclose that. But yeah, like, do you want to talk a bit more about like what you do as part of your company and what you're doing, and because I think it's very fascinating, and I think it's one of those things where if someone wants to get into the kind of Bitcoin world but doesn't want to maybe buy Bitcoin, wants to sort of invest in something that is Bitcoin related, I think what you're doing is really the right way to look at some sort of investment, something like that.
Yeah. Yeah. No, that's exactly what I want to bring to customers. That's kind of like the ethos of the company. And that's the ethos of most like mining companies that we've discovered. They really want to decentralize. They want to bring mining to the masses. It's a very profitable business if you do it correctly. And it's a very interesting business when you get into it. I fell into it, during the pandemic. I was working on a couple different projects. So I was running an Amazon business and I was an entrepreneur and I was doing some independent consulting. And then I had a partner that actually needed help bringing masks to America during the pandemic. So I partnered up with him and we delivered around $12 million in masks. And while I was doing that, I was also deep into NFTs, Web3. So I was getting into those communities. We almost launched an NFT with an American soccer legend. And then I kept going deeper into that. And I was meeting crypto punks and I was getting in with Dented Fields and Gary V's communities. And I was having a blast there. And I wanted to actually bring mining to those communities. So as I had gotten into the business, I met this entrepreneur who he had set up the mining company. I jumped on board as the COO and he explained this business model to me, where when you plug these machines in, essentially you can treat them like passive income. You can treat them like cash flowing assets. There's no employees, right? You just plug the machines in. It's almost like you have a 24/7 digital accountant working for you. You just plug him in, you pay his bill, and he's like, yes, sir. And he just works 24/7. He's never sick, never takes a day off. And he just prints you Bitcoin. And there's no marketing of the product. So the CEO that I joined had explained to me he'd built and sold 5 companies in really weird spaces like cannabis, e-cigarettes, things that were hard to advertise. He ran one of those like cash for gold, like mailing programs, like weird stuff. And he said, every business to me was so challenging. I'd have to raise the capital, then I'd have to build the product, then I'd have to launch the product, then I'd have to sell the product, then I'd have to deal with the customers. And it was an incredible, challenge for maybe 20% margins. He's like, with Bitcoin mining, there's none of that. I just plug the machines in and they print you money. And the margins can be anywhere from 50 to 70%, depending on how you're running the business. And it's highly scalable. And then the only thing, you got to think about is there's 3 things you need. You need access to a ton of cheap energy. Then you need access to all these machines, which is its own challenge because they're manufactured in China and they're low quality and you have to deal with repairs and you have to deal with basically a monopoly. And then the biggest challenge I then discovered, Bitmain, the big guys. And then the biggest challenge I discovered is capital. It's highly capital intensive. You need a ton of money. We went to market in the last bull run to raise a ton of capital to just deploy Bitcoin miners and then go public. That's what a lot of these guys do. They have insane operating margins and cash flow, and then you go access the public markets. You have even more money. But the timing of the cycle is what was challenging. So we went to market. We raised a ton of money. We had an offer for almost $200 million to deploy into Bitcoin mining. but that's right when Luna and then Three Arrows Capital and then FTX was all crashing. So as we're negotiating,
All this is
everything
failing.
freezes.
Yeah.
Yeah. So that fell through, but then two things happened. So I decided to move forward because I was obsessed. I was like, this business model is amazing. It's what I'm going to do. So I went all in. I got rid of my Amazon business pretty much. I got rid of all the other stuff I was working on and just focused on this and tried to figure out how to make it happen. At the same time, one other thing that I had done during the last bull run is I angel invested in one company. Just out of everything I was looking, but one really attracted my interest because I had reached out to a previous mentor of mine. So when I worked at Ernst Young, I had a mentor there who was our head of AI, and I reached out to him. He at the time was actually the head of AI at NVIDIA. So he had moved on. He's working there. Yeah, incredible good friend of mine. So I reached out to him and said,
I was going to say, the place to be head of AI is NVIDIA.
Yeah. He's actually at AMD now. So he moved over to AMD. He's doing incredibly well. And I reached out to him and said, Keith, I launched a Bitcoin mining company. Would you be interested in investing? He goes, Andrew, I don't know anything about blockchain. Like AI and blockchain couldn't be different, right? AI is the black box of black boxes and blockchain is the white box of white boxes. And he's like, and I've never invested in a startup in my whole life. Did my computer just die?
Yeah, you kind of went off for a second.
Yeah, I'm off. Sorry, my screen's black.
It's fine. You're back now.
That's weird. I don't know if that was screensaver. Sorry about that.
That's all right, no worries.
Yeah, we'll cut it out. Oh, yeah, something like OneDrive just... Oh, thanks. Cool, dude. Thanks, OneDrive. Great timing. All right, back on the story. So I reached out to Keith. I asked him to invest in Bitcoin mining. He goes, like, I don't understand anything about blockchain, and I've never invested in a startup in my life. Oh, yeah, here we go now. Oh, yeah, it wants to update my BIOS. Thanks, Lenovo. Great timing. That's what it was. All right, so I'll finish out the story.
Go for it.
So I'd basically say, like, I want you to invest in mining. He goes, I've never invested in any startup in my life. However, this is interesting timing, Andrew. I just invested in my first startup ever. It's an AI blockchain technology that's going to come to market. It's going to be Chainlink on steroids. I was like, dude, tell me more. Like, how do I get in? So I ended up angel investing. I brought in my father-in-law with me, and we both angel invested in a network called Jiritsu that's coming to market soon. And Jiritsu's technology is applicable to NFTs, DAOs. Like, their technology is amazing. So it's like Chainlink on steroids. You can actually run really aggressive algorithms off chain, but you can do it in a trustless environment. So you don't use Google, you don't use Azure, you don't use AWS to run your algorithms. You do it in their cloud. It can't be manipulated. And then the computation's put on the blockchain so you can verify it. And so verifiable compute is kind of their masterpiece. And what does that mean? What does it do? Well, one great example is it can be used to now actually verify that assets are where we say they're going to be. So one example is they power BlackRock's BTC ETF, and they can do the verification. So they ended up raising like a $12 million Series A from Avalanche, Susquehanna, and a couple other big names. And then there's a BlackRock MD that's part of their board. So they work with BlackRock. And they do the proof of reserves. So they're the tech that can actually prove without revealing anything. They can go and say, yes, they have that Bitcoin. We can't reveal to you anything else, but yes, we validated the Bitcoin is there. Or yes, we validated that Three Arrows Capital actually has the reserves, or that Tether has the reserves. So the tech is great. The tech can just validate, products. And then with that tech, they're launching RWAs. So they're tokenizing assets, they're tokenizing amazing products. And I came to them and I said, hey guys, have you ever thought about tokenizing Bitcoin miners? They're the only real world assets that happen to print tokens. Yeah. And so that's like a really easy connecting point. And they looked at it and they thought about it and they're like, yeah, that makes sense. So we actually pitched a product. We went to market and brought to their customers this idea of like a high yield tokenized mining product. and they loved it. They looked at it. They're like, this is amazing. This is real yield. These DAOs that have huge treasuries of tokens, they're not physical organizations. They're digital organizations. So they need to work in the digital space, and they're trying to grow their treasuries typically through DeFi. So they're trying to send some money to Three Arrows Capital and hope that the black box comes back with some yield. And I just said, these are real world assets that generate real world yield, real world cash flow. And I think we mentioned earlier that we could produce a Bitcoin for 45 grand. Yeah. And that's kind of like our business model. Like, we print this Bitcoin as a widget for 45 grand, and then we can sell them for 100 grand, 150 grand. And that's the business. There's your profit. There's your cash flow. And I explained that to them, and they said, amazing. We love it. We need a ton of it. So I have this demand on one side of, tokenized Bitcoin mining machines. And then I've been fundraising for the last 9 months to bring together capital partners that want to create the Bitcoin mines with me. And then we can tokenize and we can sell into this whole new market. And so I'm really bringing the capital into the industry. That's what I'm trying to do from two different angles. I'm trying to let investors get access to Bitcoin mining at its core for the first time ever, because pubcos don't let you own machines. They don't let you get Bitcoin as a dividend or a yield. But that's what my private equity fund can do. And then we're bringing all this capital that's created in this DeFi space also into Bitcoin mining. So by connecting these two dots, I'm hoping that I can flow, hundreds of $1 million into the space. That's my goal.
And become one of the biggest miners.
That is it. And just so I can tell you where we are today, we've made some huge progress. We went out to Bitcoin Vegas, signed a big deal, had my whole team out there, had my capital partner out there. So right now we're in talks. We've signed one deal with an alternative asset manager, RIA, that's raising multiple funds all at once. So it's an incredible strategy. He's got a $100 million gold fund that he's launching, which is oversubscribed by 250 million.
What does that tell you about the times?
Yeah. And it's going to be tokenized. So
cool.
I've discovered this fund manager, and they're a fund in a box digital asset management group, and they have everything laid out we needed. So we're one of like 6 funds that they're doing. You're going to love this. They're doing gold, tokenized racing horses, tokenized reusable rocket ships.
Okay.
Tokenized Bitcoin mining, and then he's got medical devices. It's all alternative assets. And his clients, his investors are like billionaires, like really high net worth individuals, because 95% of the deals they get are real estate. And they're over it. That's just real estate syndication. They're like, I want something different. I need different hedge. So his fund is really interesting. It's mostly gold. So the gold is the hedge. And then it's all these alternative assets in really interesting high growth spaces. So we've launched with him. He's going to raise $25 million from his investors. So he's got one single LP proposing the entire anchor. And right now we're actually in the middle of like papering it. Like, we've signed the deal. Today we're getting together to look at the financial documents, like the financial model that I built so we could build the PPM. We're going to get down to like the final offering, and the fund should be live in the next 45 days.
Wow. That's awesome.
Yeah. So that was the big one. And then on the heels of that, I have 3 more. So I just got a proposal for a $20 million fund with a private equity firm out of the East Coast. I've got a really big partner out of New York now that I brought to Vegas. That's the fun story. I have to tell you about that one. And then the 4th one is the craziest. There's a very close country that is interested in Bitcoin mining for the first time. And my team and I are lined up to bring Bitcoin mining to a country through like an insane connection we just got this week.
That's awesome. That's really cool.
Yeah.
I'm guessing you can't disclose what country that is, but that's very interesting.
No, but it's a country that's very close to us, and it's one that's not mining currently. So that's all I'll mention.
People can do their own research.
They can do their own research.
That's cool though. That's really, really awesome. And it just shows you the appetite for this, for Bitcoin, essentially, right? Like it is really there, and so I think that's why we're in a very, very good position, like in terms of the space, right? Like I think we're at a turning point, I think. But does Bitcoin, because everyone's interested in a lot of these things, and obviously you offer an alternative to people buying Bitcoin is the way you mine it, and like to me it seems like a no-brainer, because you said that you're mining it at 45k. Why would you buy an asset at the current price when you could invest into something that could get it for you at basically half price? And so, but do you think that we are now just like steady growth over the next few years, or do you think, I think we touched on it a little bit earlier, do you think we're going to have that spike that we normally do? I mean, we've already had a big spike. Let's be fair. 70k to 110 is nothing. It's not nothing.
No, that's true. That's true. That actually does. That'd be an interesting look. It's hard to say, right? We've seen the patterns in the past, and we just know that Bitcoin has this interesting like opposite effect of like equities. Like typically in an equity, you see it slowly climbing over time, and then some black swan event will crash it, and then it'll start coming back. And Bitcoin, it's the opposite. It's like it does this like slow kind of like not movement, and then it does that huge spike that we're talking about. We're still expecting that. I'm still expecting it, because I think I still sense that there's not enough greed. That's kind of how I'm feeling it, is that greed index. I feel like there's still not enough greed around Bitcoin. There hasn't been that like
FOMO.
Yeah. There's not enough FOMO yet. There's not enough like, other companies are getting on board. Oh, we got to get on board. Like I haven't sensed that yet. So I think we're still early in Bitcoin adoption. I think we're still early in the Bitcoin price, in my opinion, from that lens.
I think you're right. I do think you're right. And I think I touched on this with one of my other guests as well, that I don't think that retail investors are coming in the swathes as they have done in the past, because recently it's been just institutions buying and driven up the price to where we're at now, which is interesting, because if we hit a level of frenzy where retail are trying to buy left, right, and center, you know, do we have some sort of liquidity shock where the exchanges don't have enough Bitcoin to serve the people that want to buy it, right? Like, do we get to that point? I mean, it's a very, very liquid asset, and there's loads traded daily. So I think like it would have to be, what's the opposite of a black swan event? A FOMO event.
A white unicorn.
Yeah, white unicorn event. We'll go with that. Where everyone just wants to buy and they can't get enough, and everyone's is obviously like frothing over it, which could happen. Which I don't think is necessarily great for Bitcoin, because stability is key really for an asset class like this, and arguably it's probably the most stable crypto. But I mean, that's saying something, right?
Yeah. The other thing I'll say is, as a miner, this is what's really interesting to me, is I don't care as much about the price action, because to me, because I'm at 45k, or you know, even if you're getting into mining on a smaller scale and your cost is 50, 60k, that's kind of how I view it, is like it can bounce, you know, but as long as it's above 80, as long as it's above 70, I'm still happy. Like I'm not as happy. Yeah. So I'm still waiting for, you know, if it does another jump up to 150, my yields go through the roof. So I'm kind of sitting happy, where I'm like, I'm doing good enough. I'm probably generating like 40, 50% yields right now. But if I could wait it out and just let Bitcoin do its thing, like at some point this thing will be printing cash. So that's what I'm kind of excited for. Like I'm okay being patient. I'm okay with the downside volatility, because I know like I just need that one pump for like a short period, and I'm just going to be like in heaven as a Bitcoin miner. Same, you know, you're going to be happy if you bought Bitcoin at 100 and it goes up to 150k. You'll feel a similar kind of, you know, happiness. But if you bought at 100k and it drops to 70, you're super pissed. Yeah. And I don't feel that. So I don't feel the downside pressure, and I get all that upside excitement and more. So that's what I really enjoy about mining relative to, I'm not really a trader. I'm not a buyer, holder, investor type, you know, speculator. So I would never buy Bitcoin and like hope it does well, you know. Like I was never like the guy where I'm like, oh, I wish I had bought Bitcoin and just held it for 15 years so I could be a millionaire. That sounds so boring to me. Like that is like, I barely own anything. I don't own any stocks. I don't own very many cryptocurrencies at this point. I'm mostly 100% invested in this just because it's the most exciting thing. I love the business model around it. Yeah. So I'm focused differently in the space, I think.
It's a great business model as well. Like, and do you think, like, this is a good question actually. Do you think that obviously you've got a very sophisticated setup, and obviously you can get to the price of 45K per Bitcoin, but
Mm-hmm.
let's just say average Joe wants to go out mine it. Do you think they could mine it now at the price it is and get to a similar price point? Like, what would
Yes
the
and
average dude have to do to kind of to do that for themselves if they wanted to at this moment in time?
yeah, yeah. So it was a really hard industry to navigate. I had to go, one, I didn't get the view of my previous CEO when he did all the work. So he took 6 months to build his supply chain in China and get access to the machines on his own. But nowadays, so that would be the most critical thing because coming in, you're assuming you have the capital. So you're a private investor and you're like, I want access to Bitcoin mining. So you need two things. You need energy and you need machines. Both of those you can find through now a lot of providers, and they do it in all sorts of ways. So small scale, medium scale, everything from go and get your own machines and set it up with a partner, kind of like what I did. But I was able to do that because I did a bit more scale. I did 100 machines to start, and that's enough to get a small guy's attention. So that's how I was able to do it. But for anyone else, you would go through a third party. Like one of them that I would recommend highly would be Abundant Mines. So Abundant Mines out of the Northwest, and Bo Turner, he's got like his approach is he's created a platform for smaller investors to come in and get access to mining. My approach is I'm going a little bit bigger. I'm targeting private equity funds. So that's where I really wanted to go, is institutional investors that wanted to own Bitcoin mining assets at scale, but didn't want to manage it. They don't want to touch it. They just want to own it. So smaller guy, you go look at a bunch of third-party marketplaces. The one I would recommend the most is Abundant Mines, and they'll get you set up. You could start with one machine. You could start with 5 machines, start with 10 machines. And the industry has gotten to a point where they do this very transparently. So they'll lock you in at your rate. They'll show you exactly what your machine is doing. They'll show you where your machine is, how it's performing, because we've just had really poor experiences over the last half a decade, I'd say. So a lot of cloud mining companies came out, multiple, failures of big name companies that I won't say on the podcast, but guys that were early in the space, thank God they did it. Thank God they broke the mold and tried to create this. Now we're finally getting to a point where it's starting to get better, but there's still a lot of scams out there. There's a lot of people that will take advantage of you. There's a lot of issues with equipment. There's a lot of issues with facilities. You have to be careful. You have to pick good partners. You want to find people that are sort of on the cutting edge, deploying the latest technology, that they own their equipment, that they know how to run the facility and the operation. And then we're seeing a lot better front end, like dashboards and easy ways where you could go in and just click, purchase a miner, it's mining, pay with a credit card. Yeah. So we've reached that point where you can do it.
That's great. And some of these obviously won't be at the rates that you can get at, but they'll still be profitable at the rates they have now. And what is kind of interesting about that, it's just an easy setup shop, right? So they've got what they're paying for electricity, they've got all of that, so you know exactly what your yield's going to be for each machine.
Yep.
And it's nice that you said obviously they upgrade the machines as well. Does that often incur more costs, or how does that work?
Not that it incurs more costs, but they'll work with you in a couple different ways. One is in the maintenance and repair. They'll actually proactively monitor your machines. These machines fail at ridiculous rates. That's why we all hate Bitmain. So imagine if you bought 100 Dell computers, you plug them in, and 20 of them explode. Would you be happy with Dell?
No,
I don't. No, but that's our experience with them. So it's about 20% failure rate.
But at least you can sue Dell, right? Yeah, I don't think you'll be able to sue Bitmain easily.
Nope. Good luck. Good luck suing in China.
Yeah.
Especially lately with all the tariff action that took place, and then China throwing all the rules out, all the protection rules. They just got rid of them, so they don't care anymore about our relationships with manufacturers.
No, I mean, Can an American company just copy Bitmain's miners now, though?
So Auradine is the first really big made in USA Bitcoin mining company. We're big supporters of them, and they're deployed into one of our partners' locations, Barefoot Mining. And so that's actually a direction that I want to head with my company as well.
Oh,
So
yeah, I
that's
remember
one
you
of
saying
one.
you want to be like made in America Bitcoin.
That's it, Made in America Bitcoin. So I am looking to get into semiconductor manufacturing and development of our own ASIC machines in the next 5 years. And I've got all the pieces in place to do that pretty much. Huge capital raise that would be required to do that. So that's kind of with my company strategically, I'm thinking about how we can bring this all together over the next, 5 years, but especially over the next 18 months, because a lot of things are about to happen. I'm going to launch multiple funds. I'm going to have multiple sites up and running, and then pause for a moment and just think about my corporate entity strategy. Because at that point, I'd probably do a fundraise. I've done such powerful networking the last 7 months. I have a ton of venture capital firms that are really interested in my business, not the fund necessarily, but definitely like what we're cooking. So I think at that point, we could try and go after a significant raise and see if we could break into the Made in America Bitcoin mining ASIC market. It's a huge market, right? It's Bitcoin infrastructure, I think, is 20 billion, and it's going to grow to about 40 billion. So there's still tons of demand for these machines. And now we're starting to see, AI GPUs are sort of mixing together. And we're starting to see more blockchain and AI in mixed use. So even at the chip level. So now I'm working with chip manufacturers where we can design chips where they can serve both AI and ASIC purposes. So they could at one point be just mining Bitcoin, and then they could switch and run like an LLM model for you, or you could actually turn them into a military chip and place them into military applications. Yeah. So we're seeing a lot of advanced technologies, but AI and blockchain are becoming way more interconnected than people realize.
That's interesting. Yeah. And I guess that also is probably good in the sense, because like one of the biggest risks about Bitcoin, and it always comes around in every cycle and in the news, is like quantum computers, right? And I still think we are ways away from that being an issue, but it is a real risk. And then I guess if you're implementing, because one of the things with quantum computers is they want to implement AI with that. So if you could then also implement the Bitcoin network with that, then surely that, everyone just assumes that everything, like Bitcoin's going to stay the same and everything else is going to overtake it. Therefore, when we get to quantum computers, you're going to be able to hack and essentially destroy the network, really, is where we're getting to, right? Like it'll become, but then that's also mitigating the fact that, there are still upgrades happening on the Bitcoin network. And so what are your thoughts about that whole side of things?
I have a couple of interesting viewpoints here. One, I'll drop a total bomb on your podcast for you, which is that SHA-256 has already been broken. Most people don't know that. They would never agree to that, but it's already been broken.
Wow.
And I've got sources that can verify that. If you drop a computer in liquid nitrogen, you can get it powerful enough to crack SHA-256. And let me just say that.
So for someone that doesn't know what SHA-256, if you can explain a bit more.
So that is the algorithm that was essentially designer chosen to protect both the Bitcoin network, but also components of the 256 algorithm are very similar to RSA, which is what we use for encrypted communication and encrypted corporate networks. So that's also a big risk. People are thinking about, oh my gosh, will quantum computing hack all of the RSA keys that you use to log into your computer networks?
And technically, you're saying now that's available and
that's already happened. Yeah, it can happen. So, and the logic behind this, and I'll just say this because SHA-256 was a government technology. It did come from the NSA when you go read about the actual algorithm. And someone made a good point. They're like, the U.S. government never releases any technology which they can't defeat. So I would leave it at that. So it's already breakable, but here's a couple ideas. One, quantum computing does have a long ways to go, and people are really excited about it, but we have significant barriers to overcome, not in the compute, but in the storage. We haven't figured out how to store what we're doing, because quantum computing, in theory, it's very strange to explain, but imagine it's almost like atoms going around a black hole, and then you need to save that black hole. But a black hole, you
It's
can't
a
really
lot of
save a black
information.
hole. Yeah, exactly. So the compute is, where we're building and exploring right now, but we haven't even learned how to save. Like we're not able to build quantum computers in the way you and I think about that. We don't have all those other components yet. We're still just trying to figure out how like the processor works, but we don't understand RAM in quantum. We don't understand hard drives in quantum. We don't understand anything else in quantum yet.
I mean, to be fair, I think the term quantum computer is a bit misleading as well, because we in our minds picture it being, like a normal PC. Well, not a normal PC, but I think the idea is, the imagery is that it's going to be like a computer like we know it, or some sense, like our phones or something, some form of technology, and it's not that.
Yeah.
It is a processor. That is all it is, essentially. And but I say that with off the back of, it is still important to save this information when we ask it to potentially do something, or we get it. It needs to be implemented with something so we can kind of communicate with it in whatever way that is, as a species, which can already be done, I presume. But yeah, at the level of where, I didn't even really think about saving. Like that is, such an obvious thing. Like, what are you going to do with all this information you get?
Yeah, we don't know yet. We're trying to figure it out. I think there's technology designs where you're basically layering glasses. Like the hard drives for quantum computing would look just like this crazy design you can't even imagine, of just like glass, just glass. Imagine just rows and rows of it. Like I can't really describe it because we haven't figured it out yet. So one, I think the technology is way further than we think. Two, it doesn't matter, because if someone wanted to hack Bitcoin today, they could. And three, why hack Bitcoin when you could go hack much easier servers, like, I don't know, the entire Iranian financial system? Like that is a great point that someone just brought up.
Yeah.
That can't happen with Bitcoin, because you have to hack the entire network. But in a single incident, hackers went into Iran and erased everything. Did you hear about this?
No, I didn't actually. Is that like recent?
Just in the last 3 days. So not just the bombing of Iran, they went in and destroyed every financial record.
Right. I knew there was like cyber attacks, but that's all I heard about it. There was cyber attacks. I didn't know what that constituted. So this is what it was.
They deleted everything. The banks don't work there anymore. All the ATMs are broken. You can't walk in. There's no cash. There's nothing, because all the records were deleted. They went in. They hacked into the bank servers, and everything's gone. So that's the concept of, you can't do that to Bitcoin, because Bitcoin's such a distributed, you'd have to attack every single server on the planet. And there's, I think, 12,000 nodes just today. And those are just the nodes. Those aren't the miners. So you'd have to attack 12,000 computers at once to really take on Bitcoin, conceptually.
Yeah.
That's I think, kind of the key piece I've seen. Now, on the flip side of that, here's where the challenge is. If quantum, computing and saving really comes through to fruition, then there's two things. One, there's old wallets that we need to address. That's a big challenge, and I think Satoshi's wallet is one of them. So his wallet wouldn't be protected from, basically quantum hacking, or even just today's SHA-256 hacking. Someone could try and get access to his wallet if they wanted to. Maybe they already did. So I do think there's a lot of risk there. And the biggest risk there is, being the most distributed Bitcoin network, it is also the hardest to upgrade and the hardest to change. And we saw that a lot in the block size wars that happened in 2017 for something so small and insignificant. Exactly.
Yeah.
So imagine how wild it's going to be when quantum actually becomes a threat, and like 6 different factions erupt, all with a different solution, with different amounts of power and money and propaganda. We're going to see something crazier than we saw during the block size wars, in my opinion.
I think for anyone that doesn't know what the block size wars was, that's why you have things like Bitcoin Cash, and then adversely Bitcoin SV off of that because they couldn't completely agree, and you had miners that sort of went one way, and that was just in the deciding on whether or not they wanted to increase the block size of each node that was mined. Like every time
like data, the amount of data you could put into a Bitcoin block.
Yeah, they wanted to increase that, and then it was Bitcoin Cash didn't want to do that, did they? Or was it the opposite way around?
It was the opposite. So Cash is the one. So eventually the blocks didn't get increased. They had a little tweak to them where they did get doubled, but they weren't put. There was like these schedules. What they were trying to do is over time they thought, oh, we need more block space because Bitcoin's going to be used more like
Cash.
Ethereum. This is a terrible, or Cash. Or it needed more transactions per second because Bitcoin, I think, will do 7 transactions per second right now. And they're all like, Visa could do 100,000. We need to be Visa. So that's what they were all about. They're like, we need bigger block sizes over time so we can become Visa. And the other group was like, we're not Visa, we're Bitcoin. And so keeping the block size small actually encourages efficiency. It encourages higher transaction fees. It's actually better for the growth of the network, was their opinion. And they were the incumbents, so they didn't have to prove anything. They just need to hold their ground, and nothing changed.
Yeah.
And those guys forked, and the fork didn't really do anything.
No, the fork was awful. And then they forked again. Like, it was it. They forked to Bitcoin Cash, and then I think was it Roger Ver and what people Craig Wright. I won't call him what the other name people call him. And then he forked off and did Bitcoin SV, and it just became this whole thing, and it was just messy. I remember tweeting Wright about it, being like, why can't we just all get along? Why are we getting so messy with all this? And he tweeted me something unfavorably back back in the day, and I was just like,
nice.
okay, cool, you do you.
Nice.
And but it was just interesting. Yeah, so I guess on something that was so, because there was still, I think it was like 10% of miners ended up going to Bitcoin Cash. Like it was a fair amount. It was a fair amount, but it had to be to fork it. And then but off the back of that, there was such a minuscule, unimportant thing really in the grand scheme of things. And then you look at like something like what you're suggesting, how do we combat quantum computers? So it's not the issue that there'll be a solution, because there'll probably be lots of solutions. It's like, which solution do we agree on? And that's a real existential threat to Bitcoin, really. And it's interesting because it's not the actual quantum computing that's the existential threat. It's how the entire community reacts to that. That's the threat.
Yeah, I think that's exactly it. But I think we'll see other effects of quantum computing before we see the effect on the Bitcoin network. I think we should see other more significant issues or hacks, or I'm not quite sure. Quantum is really an unknown at this point.
Very interesting. And I mean, gosh, who knows? But by that time, we're worrying about Bitcoin, but we might have AI overlords because, you know what I mean? Like, we're looking left while something is happening right. So I mean, it's one of those things. It's interesting to talk about, though. It's definitely interesting to kind of conceptualize, and I think it's a good time, because you have to stop now, don't you? Good time to wrap up for now. But
I have to save. I have more stories. So when do we?
We can do this again. We can do this again next week if you'd like to. And
I think I want to do version 2, because I think I hate this setup. I don't think I needed to make it to my office, but Ariel was playing tennis this morning. So I want to do this again, and I have more stories, because I have to tell you, in the next episode, I found out who Satoshi is.
It's not Craig Wright.
It's not Craig Wright. It is certainly not. But I did find out who it was at Vegas at a pool party. I met a Satoshi historian. He showed me something. We looked at some data together, and we're 99% sure we know who it is.
Wow. Alive or dead?
Alive.
Ooh, interesting. Well, that's a great hook to leave it for the next episode. So stay tuned. Thank you, Andrew. Really appreciate your time today. And let's chat again soon. Thanks everybody for watching.
Henry. Appreciate it.
And